Welcome back to our CEO.CA community. My name is Amrit Gill, and we are in Toronto, Canada for PDAC, the world's premier mineral exploration and mining convention. Joining me now is Alain Lambert. He is the co-founder and capital markets advisor for Beyond Minerals. Welcome.
Thank you for having me.
How are you finding the convention so far?
It's been busy. It's one of the busiest in years. Obviously, after the pandemic, I think people are excited to be back and doing business. So it's been a very productive time.
Yeah, so tell us a little bit about Beyond Minerals.
Beyond Minerals is a company that was listed last year, and it focuses on high quality lithium assets in the province of Ontario.
And what experience do you bring to the table, and what's your team's history like?
Yeah, so I'm a co-founder, as you said, and a capital markets advisor. I have a legal background, and I've been in the Canadian small cap capital markets role for almost 30 years. And I have worked with several public companies over the years, taking them public, helping them get financed. And that's the function that I play at Beyond Minerals. So I was instrumental in taking the company public. We just completed a private placement a couple of weeks back. I did that for them. And we also, the company acquired a couple of lithium assets in Ontario, which were announced over the last few weeks. And I was also instrumental in negotiating these transactions.
So you IPO'd during difficult markets. Tell us about that process and how you really draw it from your experience to help make things a little bit smoother.
That's right. You're right pointing this out. So I guess my experience has taught me a few things, which is, first of all, to have high quality management, high quality board, and to structure a capital for the company that is conducive to creating shareholder value. And as you noted, last year was a difficult time, but we took the company public with Haywood Securities, some old friends of mine, and we listed it at 15 cents and recently hit a high of 43 cents, I believe.
Well, that did translate into success. So why do you think your story resonates with investors?
Investors are recognizing the pedigree of the people who are involved. And these are people who are experienced, have a very, very good reputation. And the group that's of managers and directors of the company are known for success. So if you look at, let's say, our balance sheets, our financials, you will see that most of our expenditures go into the ground, not to make the staff or the management rich. And we've been doing this for years with a lot of success.
So what tools have you exercised to reduce that burn rate that you're referring to?
That's very, very key question. So I believe that in junior mining companies, people should get paid for the work they do. And that means two things specifically. So one is, let's say the CFO. The CFO gets paid for doing the work, the accounting work and the auditing work and so on and so forth. And then if you have a CEO who may be a geologist, he should get paid when he's in the field doing geological work. And so we try to manage the burn as much as we can and put the money where it should go, which is into the ground.
And so what are your exploration plans looking like for the future?
So again, great question. So the value will get created by putting money into the ground. So we are currently assembling a team, a field team, so that our properties that are in Ontario, as soon as the snow is going to melt, we will have an aggressive exploration program on all of our properties. And one of the things that I'm doing here at PDAC is meeting with the technical people and putting these plans together. And I would think that before the end of March, we should be able to communicate with the market what those plans are going to be.
Going back to your experience in this industry, what are some of the red flags that potential investors should be looking out for before aligning with a company?
Nowadays, the exchanges require quite a bit of disclosure on investor relations, contracts, agreements, and promotional plans. And we're seeing more and more companies that will have 2-3 pages news releases of multiple groups that they have hired. And I would say that that's a red flag. If you look at the financial statements, and I can think about a number of companies, you can look at their financial statements and see that they spend more on promotion than on exploration. That's a red flag. And then you can go also to the financials and see that management sometimes will get very large salaries, regardless of success. They get to make a lot of money, and that's a third red flag.
So what is Beyond Minerals' current cash position, and do you have any imminent financing plans in the works?
Beyond Minerals just completed a private placement of $1.1 million, and we already had cash in the bank. So we have more than 1.1 in the bank, probably 1.5. And that's all hard cash, no flow through. And I would say that once we have detailed our exploration plans, as I said earlier, between now and the end of March, once we have that, we'll be able to cost what those exploration costs are going to be. And we'll probably look at a flow through financing. And I probably think that most of it would be subscribed for by people who are close to the company, the management, the board of directors, myself, and others that are already invested in Beyond Minerals.
Well, the name is Beyond Minerals. How are you going above and beyond to help set you apart from the competition?
So if you look at our last press release where we announced the acquisition of the North Trout Lake Lithium project, our CEO, Alain, detailed some very specific criteria that we have. The first one is we only look for assets for which we have geological data. So we don't try to stake or acquire properties near a company that's had a good stock run, as an example. It turns out that maybe the geology takes you to somebody where you become the neighbor of somebody who's had success, but you have to be able to get the technical team to look at the data and say, we should own this property. We're very focused geographically. We're focused on Ontario for now. Part of that is we think that it remains unexplored compared to Quebec and James Bay, and certainly the cost of acquiring or optioning these properties are less than if we went into Quebec. There's less competition. Another criteria is to remain very, very disciplined on how we structure these option agreements or acquisition agreements, and not overpay. And then the last point that's laid out in that press release is that we always keep in mind our share structure when we do acquisitions, so that we don't dilute the shareholders more than we have to, and so that with a healthy share structure, we're set up for success. And if we should have some good exploration results, then the shareholders will be handsomely rewarded.
Can we delve into the cap structure and the management's insider ownership?
Yes, so management, directors, and advisors, including myself, and one of our co-founders, who is Victor Cantori, who's CEO of Amex Exploration and a friend of mine, we still own about 48% of the company at this stage. We got 25 million shares outstanding, and still very, very healthy participation by the founders and the directors and the management.
Is there anything else that you'd like to share with our community at CEO.CA, Alain?
I would say keep looking, following the company, keep following Beyond Minerals. And what we have in terms of properties, as I mentioned, we are making plans to explore, but we do want to become a dominant player in Ontario for lithium exploration properties. And so we're working really, really hard to increase our portfolio of properties.
Well, thank you so much for your time today. We hope you enjoy the rest of the convention.
My pleasure. Thanks for having me.